Hello and good afternoon to everybody. This is another live webinar from Streams Global Markets. I'd like to welcome everyone who is joining. We're just waiting just a few more minutes just for a few more people to maybe join. Today we'll be covering trends, guys. Okay, uptrends, downtrends, and ranging consolidation trends. And it'll be a very informative and helpful webinar, I believe, so that you guys can actually understand also long-term trading and short-term trading, scalping. We'll get into it very, very soon. Just a few minutes. We'll just wait a bit more so that we can have a few more attendees. A lot of people did register for the webinar, but unfortunately, as I see here, not a lot of people have joined. Maybe they have forgotten the time that it's a webinar is starting. But on another note, guys, we do also have a Facebook page. We do have also an Instagram page where we'll be providing also signals on a daily basis. This Telegram channel that we have will be starting on Monday to provide the free signals. Whoever has an active account will be getting several signals in a day. With this saying, whoever doesn't have an active account does receive, of course, one signal from Streams. And again, there's no charges or fees to receiving these signals. As long as you have an active account with Streams, you can take advantage of those signals as well. And from there on, yeah, with the Telegram channel, you just need to have your phone number and to be on the Telegram channel with Streams. So guys, I see that some more people are joining. Thank you again for joining the webinar. This will be very informative and to help you guys with your trading activity. I can see that some people already have a lot of experience and are doing well with their accounts. And I also see some novice traders that have joined. Everyone is welcome to join, and even if you have experience and have a lot of knowledge, there's always something new to learn. So I'll just jump right into it, guys, so that you guys can also catch on with whatever you guys are doing. So we're doing on trends again, guys. This is Intro to Analysis 102. Trends is a vital part to trading. So trends, okay, guys, help us to determine the market direction. They tell us whether the markets are at a price level and where there are more willing buyers and more willing sellers, basically. So when there's more buyers, you usually have an uptrend. When you have more sellers, you have a downtrend. Now, there's three types of trends. There's the uptrend, where the market's moving higher. Action is to buy, usually on an uptrend. What we always say in the markets, never go against the trend. It's one of the rule of thumbs that try and follow the trend as best as you can. Try to execute your trades at a good level, at a good price. Downtrend, when the market is moving lower, is the action to sell. And sideways, which is also basically market consolidating. We also call it ranging. This is the action to buy and sell. This is the part, guys, where I'll inform you on short-term trading, on scalping or sniping. Sniping is a much shorter duration of scalping. And we'll move on to examples as well so that you guys can understand better. So as I was mentioning, guys, this what we're looking at here is basically an uptrend. Identifying the trend of the market and a particular currency, your trading is on a prime importance. You must determine the trend of the market before you enter the trade. So before you actually enter a trade, it's very good to look at how the instrument that you're looking at is trending, if it's either uptrending or downtrending. And one way to actually do this and to perfect it is to actually start by looking at the longer time frames and then moving on to the shorter time frames. And the reason being that we look at the longer time frames is that it gives us a general overview of the markets. I'll get more into that as well with looking on longer time frames and then moving to shorter time frames. Shorter time frames usually, guys, we use, as I mentioned in our previous webinars, mostly for the execution of your trades, mostly on the opening and closing of your trades, whereas longer time frames usually give you the direction on how things are moving. So we'll just move on to a few examples here with the phases of the markets. So we have the first phase, which is consolidation, where you have the supply and demand in a balance. And you can see that you have an up, down, up, down, up, down move, which is basically arranging, and then moves up to an uptrend, which is phase two, where an uptrend we have more buyers than sellers, and it moves basically up what you're looking at. Then you have again a level three, phase three, where it's consolidation, supply and demand in a balance again. And then you have a downtrend, which is phase four, where the sellers are more than the buyers. So people are starting to sell. See, they first started to buy, they bought up the price of what we're looking at. Then they're thinking on what else to do because it's overbought. Then they start selling. Okay, then we move on again to phase it should actually be one again, which is consolidation. As you can see, again, this is a ranging phase, up, down, up, down. Market is thinking on what to do. Either they will buy or they'll sell, and you guys will understand better with the ranging on how we can use it to our advantage when the market is ranging. Here at phase three, you can see that it's ranging. This basically means that the market is thinking, and because we had an upward move, everyone was buying, buying, buying. They exhausted the buying option, and because it's overbought on what we're looking at, people are thinking, and then they start selling because it's overbought. This is how usually the markets move. Markets don't only, they don't only move in one direction. They always, move up and down. Fluctuations. We need to be resilient to those fluctuations in the markets. So the forex markets are some of the best and biggest trending markets in the world. They tend to offer strong trends frequently for the day, swing and position traders. So important points of trends: trade in the direction of the trend. So what I say, the trend is your friend. Try not to trade too much against the trend. And if you do trade against any trend, you should try and have it short term. Try and be in and out of your trades, because again, the market will follow the trend at some point or another. We can measure trends in three ways: price action, moving averages, and trend lines. Today we'll be covering mostly on price action here, and trend lines. Moving averages, we're going to have to leave for another time, guys, because that's a whole chapter on its own. And another important factor to consider is that trends tend to continue. Okay, only when there's some kind of important news or important fundamental do we have a change in the pattern usually. Apart from that, another change in the pattern can be when something is overbought or oversold. Overbought meaning people have been buying all the time, have exhausted the buying scenario, and they start to try and look for sell positions. And again, vice versa for the selling. Selling basically when something is downtrending, so everyone is selling, everyone is exhausted the selling option at some point. Once that something is oversold, as we say in the markets, people try and look to try and find a good buying position. So it's just the same saying that we say in the markets: try and buy at a low and try and sell at a high. This is one example of when being something overbought or when something is oversold. So here we have again a good example of a ranging phase, also known as consolidation. So you have the markets that are ranging, basically going up and down, up and down, up and down, up and down. So this phase, which is 1 and 3 in our example above, okay, price action, relatively equal highs, relatively equal lows. Demand and supply is at an equilibrium. There's no specific either demand that would drive up the price, and there's no specific supply. They're both at an equilibrium. In this sense here, we can use short-term trading, also known as scalping, until it finds a direction and starts moving down, as we can see here. So basically, when you're here at this level, and you can see the points here, this is what we call also a support level with these equal levels. These support levels do give a good buy signal, and during a ranging phase, okay, you can see that you also have on the top a resistance level, so you know somewhat where the highest points are and where the lowest points are. During these periods here, you can actually traders can actually buy and sell near the lows and the highs. So when you have it somewhere on the lows, you can start buying and gain a few pips here and gain a few dollars into your account. When it's at a high, like over here, you can look to try and sell, and this is usually for a short period of time. Here we have it on the 60-minute chart. Okay, 60-minute is not a very short term, but you can see that in just a couple of hours, you can benefit greatly with quite a few good pips until it moves into a specific direction, which here it shows the downward trend, as you can see. This is where the part where traders are usually thinking. They're not sure on whether or not it's going to start moving up or start moving down, and you can take advantage of the short ups, and downs while you're actually just buying and selling, but only for a short period. So moving on to the next slide. Okay, this has to do with support and resistance levels. The other part was mostly with price action. With support and resistance levels is what I showed you here. These points here, these lower points are what we call a support level. The top points are called the resistance level. And you can even draw your lines just like this and take advantage basically of the ups and downs. And when you're at the lows, as we can see, you take your buys, try and gain a few pips. When it's at a high during the ranging phase, you can take those sells. And again, you can see here that it's broken the support level and starting to head down. So during the time when something is moving up or down, consolidating, as we say, we try and take advantage of short-term trading, where short-term you can take quite good advantage of good trades, make some good profits in a short duration of time. Moving on to phase 2, which is our uptrend. Okay, during the uptrend, demand for the currency is greater than supply. This is why prices rise. So we have a demand for the specific instrument here, as we see. Okay, this demand for this instrument is driving the price up. And when we're using price action, the higher lows and the higher highs, okay, I'll explain this. Buyers are in control. We can buy when the market is in an uptrend. So when the market is uptrending, we try and avoid going against the trend, as we mentioned in the beginning. So the tricky part is actually on, when do we actually take a buy position? Taking a buy position over here, for example, would be a bad idea. Now, this circle here is just signifying that the trend is forming. This is basically the second upward circle, and you can see that there's a high. So when you see the wick is quite big, this is what we call a high. Here you can see that the wick again is actually quite big, but it's on a bull candlestick. Again, usually when you have this shadow on a bull candlestick, this can signify that the trend is building and the trend is actually quite strong. And again, if you do take any short positions, do make sure to only be in a short term trade with short positions. Usually when it's uptrending, we try and follow the trend. It's the most appropriate way of trading. We don't try and go against the trend. This here is what we call, again, as well, a support level. Okay, so whenever you have a downward move, like over here is a good example, right over here. This downward move, once it reaches a support line, which you can draw, and I'll give an example on how to actually draw those lines, you can actually take advantage and take a buy position on those. So this is basically what we're looking at, the uptrend movement of the Euro JPY in this scenario. And the line that you can draw, you need to connect the points. If you have 2 points that connect, this is a solid indication of an uptrend. Having a third line is even a stronger indication that the uptrend is moving and will be even stronger with the upward move. So you can draw your lines, and I'll give an example of how to draw your lines in just a while at the end, probably. So if you guys have any questions regarding what we're looking at, do send me an email at either my personal email, a lot of you do have my email address, or at webinars gostreams.io, so we can answer any questions you may have regarding what we're covering today. But drawing this line, you just need to connect the points, and again, try not to go against the trend. This is the main objective, to not trade against the trend, where again, here, this is an uptrend example, just to give you a highlight that the points, when having 2 points, this is signifying that the trend is building. When you have 3 and 4 and 5, you know that the uptrend is quite strong. So 2 points create a line, start on the left and draw to the right. So when you're drawing your line, you always need to start from the bottom, moving to the right. Okay, this is because you're also uptrending. So you're starting from the bottom, moving up to the top. The trend lines act as support and resistance levels. Okay, this is what I was mentioning before. In this case here, it's a support level. So whenever you have a downward move, this is a good signal when it's a downward moving for a short term, that we should be ready to take a buy position. So when you're looking and drawing your lines, you can also have the scenario where you can have a primary trend line, which is the general outlook of how things are moving. This is the yellow line over here, and we know that generally that there's an uptrend on the longer time frames, and on shorter time frames, okay, you can see again that there's a lot of upward movement even in the shorter time frames. Even starting from here, basically, you can see a nice uptrend here. But the yellow one is the primary, and the smaller lines that are for shorter term are the secondary trend lines, as we call them. So you can have a trend line inside another trend line. You can have the primary trend line that has other secondary trend lines. And here's a good and prime example of how to draw them. Okay, the reason I'm giving examples, guys, is because our time is limited, and for me to sit and draw them would take me a few minutes. So instead of wasting time giving the examples, which I will at the end if we have time, I'd rather just show the examples. So with a downtrend, during a downtrend, supply for the currency is greater than demand. This is why the price declines. So at some point when something is moving up, the demand is there, it's increasing, of course, and the trend is upwards strong, for example. At some point it will be overbought. When something is overbought, people start to try and look for selling positions. And once they start selling, people are selling, they start selling, say, over here, and then moving on towards downwards, you can see that the selling is getting stronger and stronger each time. This is another good example of basically the lower highs and the lower lows. So again, you need to look at your shadows, your wicks, this thin line on the candlestick here. You can see that when you have it, a lot of the times on a bearish candlestick, when you have a long wick on the bearish candlestick, should be prepared for a downward move, like on this circle right here. This is a good example to take actually a nice sell. And it moves all the way down. You can see again here the wick is quite long, longer than the candlestick. Okay, the lower highs, and you can see that massive drop over there, and even here, these ones are very nice downward moves. And then we can see that the shadow is usually larger than the candlestick, the actual candlestick itself. Usually when you have a larger wick than the candlestick, this usually signifies some kind of big move that may occur. So we'll move on to, again, a trend line, how to draw a trend line. This again is a resistance level at this time, because we have a downward move, okay? You can draw your line on top, okay, which I'll show you on the MT4 platform on how to draw your line. That will be a definite thing that we need to show. But you can draw your line. You just need to make sure that you connect some of the points, the high points, basically. If you connect the high points, this is a confirmed downward move, and it also gives you an extra benefit where it shows you that this is a resistance line. So whenever the instrument is moving a bit up, it touches the line, you should be, again, prepared to try and take a sell. Again, you need at least 2 points that are needed to create the trend line. Connect the lower lows to create the downtrend line. Downtrend lines act as price resistance. So as I was mentioning to you guys, this is the resistance line, and it does help to confirm when you should take your sell. So I would suggest for all of you to be trying to draw your trend lines. It will help you in order to determine also your execution. Okay, you can use trend lines in any time frames. The shorter your time frame, that means the shorter the duration of your trade. Okay, the longer time frames that you use to draw your trend lines, usually that would signify that the longer your trades would be holding on to. So again, just like the uptrend, we have a primary trend line, which again here is the top one, the purple one here. And then you have secondary trend lines, which are for the shorter time frames, which can also be drawn to confirm. Okay, the primary is usually on the longer time frames. The secondary is usually on the shorter time frames. And do note also the changes in the intensity of sentiment at times as well. The primary trend line, also known as the general trend line, could be on, for example, a daily or even a weekly chart, where the secondary could be on on an hour or even minutes time frame. So when you're combining basically your trend line with a support level, like in this case, this confirms a better entry level for your trade. In this case here, we're uptrending. You can see a downward move, touches the support. It's a good time to actually take a buy position because you've reached the support level as well. And because we know that there's a trend that has been built from the two levels from before over here, it's good to actually try and take a buy. Price support is where we find low risk opportunities to buy. Price support helps us time our trades. So again, it's all about the timing, guys. When you execute your trade, if you're able to execute your trade where support level meets a trend line, like in this example here, you have a solid buy scenario, which again should work out quite fine. The uptrend tells us basically in which direction we should be looking for, and in this case we're looking for buys, and this support line actually confirms it to take the buy. So when it's downtrending, again we have price resistance. Price resistance is where we find low risk opportunities to sell short. Price resistance helps us time our trades again. Okay, so we see here a downward move. We have a support, a resistance level over here. When we start seeing it moving up towards our resistance level and it's touching the resistance level or near the resistance level, we should be getting ready to take actually a sell position. We know that the trend is there, the downward trend is there. We see it move a bit up. It is a good time to actually sell. Good selling opportunity right there. So this was basically regarding trends, guys, and I'm going to show you now really fast on how to draw some of your lines, basically on how to do it on the MT4. Really fast. We can find basically one of my charts here. Okay. So guys, something that I haven't shown you guys from before, okay, was that sometimes trend lines can actually cross. Let me just delete this trend line. When they cross, this point here where they cross is actually a good sign that something will happen. We'll either choose a direction. But in order to draw our trend lines, let me just delete this one as well. Okay, I'm just gonna delete the. Okay, so basically we're downtrending. As we can see, this is an hour chart, guys. So in order to draw your trend line, you need to select draw trend line in your menu. There's two ways to do it. You can also do it, again, you can do it through the chart where you can choose objects as well. Okay, here where it says lines, you can choose trend line. Okay, if you guys can't find it on your menu, but you should have it on your menu, and you can just draw your trend line like this. Okay, and adjust it basically so that you have a few points that are matching. So you have this point from the top, reaching one point here. There's another point over here and another point over here. So 3 points. And you can see that it's trying to break here. So we should be getting ready to take some kind of a sell position. And if you look on the general time frame as well, so on the general time frame, we can see on the daily that it's uptrending. So you can see from here, we take again our trend line. You can start from the bottom here. Okay. Okay, my apologies. It's supposed to be on the other side. So this will be a resistance level. Let's go back to an hour, guys. My apologies. So this line, we should be as some kind of a resistance level right here. So usually when we have it over here, this is a good time to take a sell. So we can take a sell position right about now. This one will only be for a short period of time, maybe for an hour to about 3 hours, due to that I'm looking at a 1 hour. Again, the general time frame, the 1 hour time frame basically is showing to us that it's favored on the upside. So if I was to take a longer time frame, a longer trade, that would have to be on a buy usually. You can see from here, guys, the trend here has formed on an uptrend trying to move up. It has broken though this support line here. So probably we should see it move a bit down on the hour chart. And I think that's what we'll cover. So just remember to try and draw your trend lines, all right? See what you can actually do, and they will help you if you're actually using also support and resistance levels. Support and resistance levels we covered during the previous webinar. As I mentioned, you know, you don't need to be exact with your support and resistance levels, but it's also the same with the trend lines. The trend lines are just giving us a view, and you can see here, let's go on a shorter time frame, on a 15-minute, that this trend line here is nearly broken. Even though I've taken a sell, I should try and put my stop loss, my take profit levels, all right, somewhere around here. Okay, have my take profit level a bit higher than my stop loss, just in case it starts moving up again. At least it'll take and hit my stop loss and won't continue with gaining a loss. And again, I will only have this open for about an hour or 3 hours max until it closes. If by that time nothing happens, then I'll have to see on what to do. But in general, drawing trend lines is a great help to everyone, and it will make a difference to your trading. So any questions that you guys might have, just email me directly or let me know for a phone call so that I can explain things again. Just try and always connect the points when you're drawing your trend lines. If you connect the points, then you have a solid indication, and like I have done here for the pound USD, that it's favored on the shorter time frame of a 1 hour to be heading down. But again, do look at the general overview. General overview is uptrending, so I'm not going to hold my position for too long on a sell. So thanks for all your participation during the webinar. Again, if you guys have any questions, all right, just let me know. Just drop me an email or we can arrange a call. Thank you for joining, guys. Take care. Take care. Yeah. Yeah, we should.